Welcome to this week's 7X Investors Look Ahead. This is where we'll take a look at a currency pair, an index, or a commodity like gold or oil, and give you our outlooks of what we see coming this week. Before doing that, we like to share with you a little bit about 7X Investors. It's a platform where you can develop a free account and join our community. In that community, you can be able to have free trainings, which we hold every Wednesday. You can also gain knowledge from other traders that are in the 7X community, or even in the other communities such as Alpha Trader or 7X Futures. As you attend the weekly trainings, you can be able to get a more in-depth understanding of what kind of trader you would like to become, whether it be in futures or in Forex or CFDs. Once you decide what you'd like to do, we have specialized trainers which will go through step by step on how to become a proficient, profitable trader. We have Cordell Stevens in the Alpha Trader section, which deals with trading CFDs or currencies. And we have Dan Kelly in 7X Futures, which trades futures in the Nasdaq, the S&P, and gold. At the end of this video, we encourage you to click the link below, which will take you to our website, and you can set up that free account. Also, subscribe, like, and turn on notifications of the site so that you can get notified every time we release our week ahead video. Now let's take a look on what's ahead. Okay, traders, let's start off with the Nasdaq. Looking at this one here, boy, quite a week, and we are moving into a downward spiral. We're going to take a look here and see how this might pan out. So first of all, we have reached very close to the channel line, the uptrend channel line right here. I don't expect it to break through this immediately. I expect something like a pullback either to the 14,973 level or extended move up to around the 15, let's see, about 15 to 17, right around there. I don't expect it to go much higher than that, but this is what we're going to be looking for. We're going to be looking for something where it pushes up and either at this level or the next level, and it starts to move back and forth here and kind of give us a range and slowly breaks this and comes down to this level, which sets at about 14,258. Now, we may stay in this range section during this week. So we may be ranging here, or we may pop up to here and roll over. That may take a week, maybe 2 weeks. But I expect a range this week. If we do pop up and roll back over and break this trend line this week, this coming up, expect a free fall down to 14,258. That's the next zone. I'll just mark that out here so you can see it, but you want to be aware of it. It's kind of in this, see this resistance here, this accumulation area here, resistance, support. So we're setting at that resistance right now along with the channel. That's why I'm expecting a bounce. So we may see a bounce going into Monday, Tuesday, possibly extends into Wednesday. We'll just have to wait and see. But a bounce up maybe to this resistance right here. It could extend again up to here, but I wouldn't expect it any further than that. But watch for here to see if there's a turn at this level. It's pretty close to 15,000. But right in that level, right around there, look for a pullback and kind of a range type daily activity. I expect it to be all rangy next week. But if we do get a sharp down move and we break this channel, again, a free fall down to that level of about 14,267. Please be aware of that. Now, what happens when we get to that 14? We'll just square this out so you can see that zone right in there. So that's the zone we're talking about right there. But what happens when we get down to that level? I expect we probably see another bounce, and then we roll over again, and we come all the way down to this 13,752 in the coming weeks. Now, why that level? Well, if you scroll back here, that's a major resistance, probably going to be a support zone. So once we get down to there, we'll probably have a significant move up. But again, if we break this channel, we are going to move, hit pull back, hit, and we will more than likely come down into there in the next few weeks. But again, I'm looking for ranging and possibly a break coming up this week. So be aware of these levels. Once they hit, if they start to, if it pops up here and it hits up to this level, this about 15,000 level, and it starts to hold there and it starts to roll over, it's coming and you trade it. And when you break this trade from here to here is significant. It's quite the move. It's quite something to see when you get these moves up. You can see how the moves up are pretty choppy, and you get a push, pretty good push every once in a while coming in here. But when you come over here, didn't mean to do that. When you come over here to the other parts and you see these down moves, they're just like we call them elevator drops. They just free fall because there's nothing there. There's nothing there to slow this down. Once it breaks, there's nothing there to stop it, and it just starts to fall. You may get a little, push off here, but it's going to free fall all the way down to this major support level. There's nothing till you get to that level. We're going to talk, we're going to extend this video a little bit more this week. We're going to talk about why some of the possibilities of this is happening. I'm going to show you a few more charts to help support this outlook. Next, we want to take a look at dollar yen. Now, dollar yen is about ready to push up again. I expect a pullback here. Now, we could do something like this. Let's go ahead and look how this might play out. We may see something like this, and then back down, and then up. Or we may just see a continuation down, and then back up, pull back, and then up. I expect it to do this one right here where it pulls down a little bit more, maybe to 143.84. I'm not sure if we go that far, but somewhere between there and there, I would begin to look for a reversal for a break of this high that it made this week. We're seeing dollar yen that it's starting to weaken again because of the circumstances which are going on, and we'll discuss those. And we're looking for a break of this high that it made this week, which sets at 146.50. So a break of 146.50, we're going to start making our way up to 148.95 or 149. So I'm looking for some ranging here this week. Probably next week we get the break. But again, if we break this high this week coming up, to trade this clear up to 149 is where this is heading to, or to the top of this channel. Again, dollar yen is a very strong indicator of what markets are going to do, if markets are going to go long or short. And we're seeing this after this big pullback here. We're seeing this starting to build momentum back to the upside. And there's good reason for that. So look for the pullback and the long on dollar yen coming up. Next, I want to show you a weekly chart of gold so you understand what it's about ready to do. You see up here, we had 1, 2, 3 times gold try to penetrate this level at about, setting at about 2080, and it couldn't do it. Gold is going to start to head to the downside. And so when we come to the dailies, which is going to be the next chart, we're going to see how this might play out. So here's the daily of gold. What we expect to see in gold, probably we may see a little bounce here, pulls up. But again, as it ranges over, it's going to drop and head down to here, which sets, that area sets about, let's put it at about 1830. So we're looking for a sideways move in gold this week, and then eventually, it pulls back sideways, and then it eventually rolls over and it goes to the downside to that level, which sets there at about 1830. That's what we have listed out for gold. Again, this has a lot to do with yields, but the Fed coming out this week didn't seem like they were interested at all yet in dropping rates. In fact, they were more bullish that possibly they would have to raise rates again in the future. That is going to be bullish for the 10-year. That is going to be bearish for gold. And so I would look for a continuation on gold to the downside after a small bounce. The next chart I want to look at is the S&P 500. That's the one here in the green and orange candles with the dollar yuan, which is the Chinese yuan. And we're looking at a couple of things here. Whenever the yuan, generally speaking, when it goes down, you see that the S&P 500 goes up. Whenever the yuan goes up, you see the S&P 500 go down. Now, we had a divergence move here where the S&P 500 continued up and the yuan right here got weaker as well. So they kind of went in accordance with each other at the same time in the same direction. However, that has now changed as we go ahead and we look at what's happening here. The yuan was getting strong here and now it's getting weak again. And this is definitely correlating now with the S&P 500 getting weaker in price. Why is that? What's going on? Well, back in 2021 and 22, we had a company, Evergrande, over in China fail. It was a property company and they failed, but that wasn't the end of it. And just last week, we had another company fail, which was Country Garden. Now, why is this such a big thing? Well, Country Garden's not as big as a debt pile as Evergrande was. Country Grande is about 200 billion versus 350 billion of Evergrande. However, it's a much bigger firm. It's about 4 times as large as Evergrande. And what we're looking for here is that they own or they have what is known as 650,000 apartments, which they have sold, which they have not built yet. Now, let me explain to you a little bit how this works. When you're over in China, you purchase the apartment. It hasn't been built. You still make payments on that, even though it hasn't been built. Now, with this company going broke, those apartments will never be built. What happens to the people that hold the mortgages on those apartments? As you can see, this could be a big problem of unrest in China. China is feeling the all-powerful effects of deflation coming into its economy. It was hoping that it would, after the pandemic, push out of it. It has not happened. They have put more restrictive controls on their economy, and this is not going to allow it to grow. Exports have contracted, especially over here in the US. Things are getting real expensive. We're not buying as much anymore. It's contracting. China is feeling this deflationary pressure. And because of this, and because the effect that China has on the financial markets of the world, this is causing weight to be felt in our markets. And that's why we're having this now down push, because liquidity, which is necessary for markets to be bullish, is starting to dry up again. And that's the main thing we want to focus on in the next chart. This is the dollar index. Now, why is the dollar index so important to us? Well, the dollar index can be a signal of liquidity and non-liquidity. So you see here, we had the dollar moving down and it was in this range. It dropped below the range, but then look what happened. It came right back up into that range and started to make its move to the top side. Now we're up against this channel. What do we expect to have happen here? I expect to have a short pullback, and then we break and head on up to this level, which sets about 105, 106. This is very important. Why is this important? As liquidity dries up, dollars equals liquidity. Dollar is the reserve currency. When you have more dollars, you have more liquidity. When you have a lack of dollars, you have less liquidity. As liquidity dries up, the dollar will be in more demand. There'll be less of it, which will raise the price of dollars. Okay? Now, with that being said, that means that other countries around the world that use dollars, they don't have as much access to the dollars now. And that means prices become extremely expensive for them, meaning if they have debt, dollar-denominated debt, that is going to make it very costly to make their payments on that debt. Think about if you had a mortgage and you were paying 3%, and all of a sudden you woke up one day and you were paying 15% on that mortgage. That's what's happening to these countries that have dollar-denominated debt. And so this causes a squeeze in those economies because now there's not as many dollars to pay for other things. It has to go towards debt. When that happens, these economies, these foreign economies contract. And when they contract, now you're starting to feel the effects of global deflation, and it starts to press upon everyone. We see it in China now, but it's going to spread if this continues. And I don't see anything that says liquidity is going to be pushed out into the global economy. I don't see anything like that on the horizon. And so we see banks pulling back. We see even bank contraction and failure in the United States, which is one of the main mechanisms which we get the dollar currency out to the world. We get it out through loans. Loans are contracting now because the rates are so high. People are pulling back because loans are becoming so expensive. All I see is contraction in the dollar monetary system. And with that being said, that means lack of liquidity. That means markets are heading lower. And this is why we keep an eye on the dollar. And so I'm expecting this dollar to pull back and then break out and head up to this level of 105, 106. Not sure if that happens this week, but in the coming weeks, we could see some ranging here in dollar this week, but expect it to break this channel and move up. And when it does break, you know where to trade it to, up to that level there, which is, technically speaking, 105.88. I'm just going to call it 106. Dollar is poised, about ready to push higher. This is why we can expect the yen to get weaker. This is why we go long dollar yen. This is why we go long pound yen. This is why we might even look at going long Aussie yen. But Aussie is going to be really affected by China. So not so sure on the Aussie yen. But definitely on pound and dollar yen. Expect those things to go much higher. Now, I just gave you a little bit of why these things are starting to happen. There's a lot more behind it. We've got a release from BlackRock this last week that says they're starting to move assets or money out of the United States, and they're starting to go into emerging markets, which means this, that things are going to become very cheap in emerging markets because of what I just told you here. So what is BlackRock going to do? Well, they're expensive in the United States right now. So what they're going to do is they're going to pull their investment out of the United States, and they're going to go ahead and go buy cheap assets on the global market, because those assets in the future are going to rise in price. Then we're going to have a down move in the United States in price. And then what BlackRock will do is they will come back in and buy cheap assets in the United States. And that will make their management portfolio, which is way over 19 trillion now, that will increase it, even make it larger. So you see how BlackRock's positioning for this. So you can kind of get an idea that pretty soon here in the United States, probably next year, we're going to start to feel the effects of the D word, and that is deflation. So that's what's on the horizon. But I wanted to give you a backdrop of what's going on so you can understand what is our reasoning for having these markets go to the downside after maybe a pullback this week or a range this week. We expect a continuation to the downside. So that's the reasoning behind it. I hope you found this video informative, and we look forward to giving you future videos. Again, click the link below, go to our website, sign up for a free account, stay on tap, get information so that you can stay ahead of this thing, so you can prepare for what's coming. We will see you next week in the next Look Ahead.